All right, let's stay on the topic of markets, thinking about the role of retail, and talk a little bit more about what's happening on the fixed income side as well. Billy Hult joins us now. He is the markets president over at TradeWeb. Billy, it's great to talk with you this morning. I'd love to begin by just asking about the role that retail plays in the market as far as you guys see it, and how that's changed for your platform in the last year, how that conversation has changed with folks in the industry who saw it going one way for a long time, and now it's really been quite an interesting year.
I was happy Friday, guys. I was listening to how you guys were describing yesterday, and I was kind of watching along with you guys. It was absolutely riveting television. And I would kind of say that I kind of agree who the kind of hero of the day was. The kind of I am not a cat moment, I think, is a moment that we all kind of have now kind of seared in our brain. It was just, it was an amazing kind of television day, and you guys covered it great. It was a fun kind of afternoon to kind of watch what was happening. The fixed income market has always traditionally been an institutional market, right? So TradeWeb kind of lives and breathes in the institutional market. We're really in the network business of connecting, the biggest buy-side clients, the pension funds, the hedge funds, the asset managers, the central banks into the biggest banks, the market makers, JP Morgan, Goldman Sachs, Morgan Stanley, et cetera, across all the kind of big liquid areas of fixed income, from, on-the-run government bonds to high-yield credit, ETFs, global derivatives. We're kind of in all of that game. And it's been an incredibly interesting year for us, and in part because the markets are super interesting, obviously, around volatility before and after the election. Obviously, everything that happened in March was a huge deal around how the bond market was functioning. And now you have all this kind of big, heavy issuance happening in both credit and government bonds. And oh, by the way, work from home has kind of changed kind of everything. So I grew up, I'm a little bit older than you guys. I grew up kind of reading kind of Liar's Poker. So I grew up as a bond guy, and I always kind of knew the sort of bond market as these big kind of characters historically at all of these banks. Kind of, it was, it's a Friday morning. It would be hamburgers at 10 o'clock. And these were big, forceful personalities. And it's amazing to see how the electronic world has kind of risen inside of fixed income. And it's a really big kind of moment for us as a company.
Well, now we have no time, Billy, to eat hamburgers during the session because things are moving so fast. But we'd love to get your thoughts on real-time trade settlement. How is that going to be a thing? How heavy a lift would that be?
In fixed income, I think the fixed income market operates really well in terms of kind of how that settlement process works, particularly in the liquid areas around government bonds. I think we've kind of had that sort of the plumbing around all of that nailed. I have kind of learned one thing this year, and I think you guys know this really well, which is basically anything can happen. And we're always going to try to get to the best answer around all of this stuff. The one thing I was kind of thinking about yesterday as I was watching was just really understanding the plumbing of how these markets work is really, really important. And also articulating the plumbing is really, really important. So, the operating of fixed income has worked traditionally really, really well. That being said, we all know anything can kind of happen, and we're going to stay very focused on making sure it continues to operate very well.
Billy, Julie here. I want to ask about something that we've been talking a lot about, and that this is a reflection of, is increased risk taking in the market. And I am curious about that on the fixed income side. And one example maybe of that is that MicroStrategy convertible debt offering that we saw earlier in the week. They got upsized from $600 million to $900 million. With basically a way for fixed income investors potentially to play crypto. And I'm curious if that is emblematic of this reaching that we're getting in all sectors of the market for yield, for return, and whether there is any risk in that.
It could be. It's a great question. I mean, I think that we're all trying to figure out on some level where the yield curve is going. Is there a moment in time where the right trade becomes around shorting interest rates? Obviously, and you guys cover this extremely well, the rise of Bitcoin is kind of a part of all of this. What is Bitcoin? Is it an asset class or not? Is it correlated to the market or not? I think the participants, especially on the retail side, are getting more and more sophisticated. And I think that's one of the things, quite honestly, that came out yesterday was just the level of sophistication has risen. And I think ultimately that sophistication is going to connect more into fixed income. And so we'll see more of that going forward. It's a great question, though.
Billy, I want to ask a bit about, and you mentioned, the old trading floor, the liar's poker vibe. I remember my dad was doing the communities for something back in the 90s, right? It was a whole thing. Seemed very cool, very fun. That's not coming back.
I'm the 80s, but it's okay. Yeah.
Yeah. William Simon back in the day. Anyway, so, that whole thing was very fun, but that's over. Do you think that working from home during COVID, I know a lot of banks have brought people back to the floor, but has that even further accelerated the distribution of trading teams, geographically? Because certainly things have worked okay for the most part with kind of a hybrid setup, only a couple guys in the office. And is this going to make big institutional firms rethink their physical footprint, especially with a platform like yours enabling that digital trading as well?
Yeah, there's no question. It's a great point. Look, those days are kind of over. You're right about that. That being said, the business still stays, I think, in a really good way, relationship based, right? So the relationship component to fixed income trading is really, really important. That being said, the work from home environment has absolutely accelerated ultimately the electronification of these markets, and there's no going back. So let's kind of start there and understand that. My general instinct is New York City is always going to be a major player around how these markets operate. It's been a rough year for New York. We all kind of know that really well. But it's kind of where the action has historically always been. My general instinct is New York's always going to play a very large role around the marketplaces. And I think the big banks and all the major players will continue to have a big presence in New York. That's my hope. I'm a New Yorker. I love this city, and I want it back to where it was.
I think we can all agree on that as we sit here and distribute it across the New York metro area. All right, Billy Hult, president at TradeWeb Markets. Billy, really great to get some time with you this morning. I hope we can talk soon.
You guys are great. Thanks very much for having me on.